Okay, folks, I hope you're all doing well. This section is to discuss intrasession highs and lows during the London and New York sessions. These are also treated as key levels under the cable traders curriculum. However, the proviso is that they are M15 swing highs or lows. At a pinch, we can use M5 swing highs or lows, but I'd prefer in the beginning to use M15. There will be exceptions, and we can discuss this during the day. This is where the split screen comes in. I tend to use M1 for entry, and I'll have a split screen on the side that I flick between M5, M15, and H1, just to get an overview of where we're at the day. M1, you can kind of get lost in the noise, as it were, and not really have a clear view of the bigger picture. So we're currently on M15 here and M5 here, okay? For the sake of argument, because we're limited on TradingView for M5 historical data, I can't use M1 at the moment, so this will normally be M1, but it's just M5 today. In terms of setup, I have a desktop and a laptop running currently. For the laptop, I have the futures footprint. I have the MT4. I have my props set up there too. And I have things like the market profile and the imbalance indicators. And then on my desktop, I have TradingView running with these two split screens. So intrasession highs and lows are M15 swing highs and lows created during the London or New York session. So you can see one has just been created here at 10:10. Okay, so a couple of hours after London Open. So on M15, I'm using an indicator just to kind of illustrate a point here. Nearly there. Okay. Here we are. So this purple line indicates it's a swing high. If you don't know what a swing high is, it's just a 3-candle pattern, up, center, and then down. I'll get into this in the price action section. So this high corresponds to this high here, and I call this an intrasession high. Okay, so this is going to contain a lot of liquidity here, so we have to be aware of that. So advanced warning here, it's going to take a lot of discipline and practice to mark these up, but it will get easier as time goes on, and you'll have full guidance during the day as well. So in this example, we have an intrasession swing high created at 10 a.m. And it's a short time before London lunch. It doesn't really hit any level that I see. It comes close to M15 supply, doesn't quite hit, and then it drops pretty precipitously, pretty quickly. And it drops like a rock to H4 demand, okay? So I did not see this as a trade anywhere. I could not find a way to get into this. So we're getting to New York Open now. It's hit this support, hit H4 demand. It's wiped a low here, a short-term low. And it comes straight back up. And then it wipes this high, okay? And then it hits the trading level. So if you've been paying attention to the last two sections, we now have two ingredients for a really good short trade. So we've got a key level, an intrasession high, a trading level, M15 supply. So we can quite easily short here. We zoom into M1 at this point and we find a confirmation. So I'm going to show this in a future section. This is very high level for now, just to kind of show what key levels are and why they're important. I remember there was an imbalance created here in the futures market. So this was a perfect area to enter a short. We had hypothesis, which was that a short-term high was going to be wiped, a key level, which was then rated for liquidity, into a fresh M15 supply level, and then confirmation in shape of a large imbalance. So we can enter a short with a stop loss. My default is 3 pips, but it's up to you. If you want to place it above the high and have 11 pips, that's fine, but I usually use like 3 or 4. We'll get into that in more detail, of course. And very easy for a target, we can just target the London low, okay? And that's an H4 demand, so there's no point targeting anything more than that. So we'll just see how that plays out. So just one thing I want to point out that I really want to stress here is that you decide your target before you enter the trade, okay? If you enter your trade and then start deciding your target on the fly, you will not hold down to the proper target and you'll start damaging your edge quite quickly. This is a problem for a lot of reasons. Some people say nobody ever went broke by booking profits, or the saying went something like that, and it's absolutely not true. Because you need to maximize your edge as much as possible because you're going to have losses you need to cover. You're going to have discipline breakdowns. It's going to happen. You're just going to have bad mindset days where you just lose. So it's very, very important that you decide your target before you enter the trade and then do what you need to do to actually stick to that. Take partials if you need to, but stick to your take profit. What I usually do is have some kind of mitigation plan. So let's say price starts compressing and then reverses heavily. I might place a trailing stop here, here, or somewhere. But that gets into kind of more advanced detail. But for now, we hit our London low, so that's a good trade. That's unbelievably that's a 35R trade. So absolutely perfect. That was caught by one of our students, so we were really happy with that. Um, so just one more thing I wanted to cover on this. Just while we're on the topic, there's some theoretical things on intraday trading. Basically, what I consider the difference between scalping and intraday trading. Scalping's try to catch a 10 or 15 pip reliable move between imbalances within minutes. And there's absolutely nothing wrong with this way of trading, and I still do it. It can be used extremely profitably, and it's quick, it's instant gratification, and it's a good way of trading. It's, however, is very fast and furious and demands pinpoint accuracy. And if you take a loss, you can lose a lot of money very, very quickly, and it can really ruin your mindset. So that's the kind of downside. What I prefer is what I call intraday trading, and that's trying to catch like one of the larger swings of the day, so say 50 pips, to try and catch a move like this. And if you do 1 or 2 of those a week, you're cashing in basically. You're in really, really good shape, and it's a lot less effort taking 1 or 2 trades than try to scalp like 10 trades in a week. So it's not always going to be a 3 pip stop loss. Sometimes it's going to be 5, 6, 7. But your risk to reward is still going to be in the 16 level. Um, so that's it. That's just one of my kind of theories on trading intraday, scalping, intraday swings. Swing trading is a whole different thing, which I don't get into. I don't like holding trades overnight and for weeks and stuff like that. But I'm not even going to cover that in this syllabus because it's not my thing. I just don't like it. So anyway, that's intraday session highs and lows for you. And we'll cover some more topics in future. So thank you very much for listening. And